Hey there, it's Trisha with Easy E-mini Trade, and I was going to show you some examples using the Slinky advanced entry techniques from Friday, just so you can get the feel for what we went over during Thursday evening's webinar. If you want more info on the webinar, you can go to easyeminitrade.com and click on the webinar recording tab if you would like to get the recording. So let's get started. Okay, so I'm just going to go over a few charts from the NQ from Friday morning just so you guys get familiar with it. So this is an 8 range chart on the right and this is a 16 range on the left. I'm using something bigger. You can go smaller and I'll show you a couple on some time-based charts as well. We've got the open here at 9:30 on the chart on the right. We get closed above the super trend stop here. This is right off the open, so I would not be interested in it. Generally, I wait till like 9:33 to start looking for entries or until the market picks a direction, but that's just my preference. It doesn't have to be yours. So looking here on the entry chart, so what we did was we have the double stochastic on both our entry chart and our filter chart, and in order to fine tune it just a little bit more, we've been requiring both to agree. So here we get closed above at 9:30, off the open. And then looking at our filter chart here, I marked it where it was. And so on the entry chart here on the right, we have the green line above the red. So this is in line for a buy. Again, off the open, to me it feels like a gamble because you never really know what direction it's going to go. But just for the sake of explanation, green line above the red, so valid for a buy off the entry chart. And then looking over here on the filter chart, this is the bar that was forming at that time. And you can see our green line is under the red. So this does not agree for the buy. We would want the green line above the red, or we would want the red line above 80 and overbought in order for this to be valid as a buy. So you pass. Here, still early, but close below the super trend stop, green line under the red here, and then looking over here on our filter chart, green line under the red. So you can go ahead and take that. Now obviously you can see here that price was holding an area of support here, and then we've got that 200 EMA. So if you were to take this, generally what you would look for is a reaction at that 200. But again, right at 9:31, anything can happen, and obviously it works out just fine. And then once through the 200 EMA, the next support area would be the pivot point from the floor trader pivots. And you could trail once in the trade after your initial targets hit. If you're exiting in multiple exits, that would be an area where you would be looking for a reaction. And then you wind up getting divergence off that pivot point. Not telling you to buy it, but just it would be a heads up that price is likely going to bounce off that pivot point. So you may adjust your stop, just above the pivot point, and then, then you get stopped out around the pivot point area. If you held on to a portion of your entry, you could trail using a couple ticks above the super trend stop if you like. You can use a level of support or resistance, however you guys like to trail. Once through the pivot point here, you could look over on that 16 range and you can see that that price is coming down to that 200 EMA. And no matter what chart you look at, the 90 EMA, the yellow one, and the red one is 200 EMA. Generally, price will react in both of those areas, just a heads up. All right, so here we get closed above on the 8 range, and you can see where it is on the 16 range. So green line above the red, right? However, that red line is still in oversold. So technically, we would not be looking for a slinky buy. If the red line is in oversold under 20, we're still looking for slinky shorts. Now, with the exception of that would be if you had 40 points worth of space, or you could take one of those advanced entry techniques based on what we went over during the webinar on Thursday afternoon. And then if you look over here on the filter chart, green line is above the red. However, that also an oversold. So this is telling us we're going to stay away from this buy. Here we get closed below on the 8 range, right? So not valid because our green line is above the red here. If the green line was under the red or the red line was an oversold, then this would be valid on the entry chart for the short. If you look over here on the filter chart, red line still an oversold, so this would be valid on the filter but not on the entry chart. Keep in mind, we're just trying to filter out and take the higher probability entries. If you trade off a smaller chart, you can take every time price breaks the super trend. It's totally up to you. Looking to just basically filter out some of the noise. So that is the whole point of viewing multiple charts. Here we get closed above the super trend stop, green line above the red. Here on the filter chart, looks like it's coming out of oversold. So realistically, you could take this as a buy off this chart. And then what would be going through my head is, okay, I'm right into the 90 and the 200, and I'm right into the 90 on my filter chart. And you can just decide if you have enough room. Also, I've got the super trend on the filter chart, and you'll find that very often on those higher time frames or larger range or tick frames, that price will react at those areas, at least temporarily, as a support resistance area. So even though you're into that muck just mentioned, this does work out just fine. So again, just having an idea of where support and resistance areas are can be very beneficial in taking trades that otherwise you might pass on. Okay, right here you can see price gets below the super trend. Green line is under the red, so good for the short here. And looking here on the filter chart, green line is above the red, so that would be a pass. Now again, if you want to be aggressive, you already know where support is, right? So if you take this entry off the 8 range chart, you determine that you're willing to give that a shot, knowing that support is just below you here in the 200 right there. That would likely be the reaction area. So if you determine that there's enough room, then you give it a shot. And that's only something that you can decide for yourself. All right, right here, we get closed above, green line above the red on the entry chart, but the filter chart green below the red. So it would be a pass. Now, again, I know I sound like a broken record, but if you determine that there's enough room up to resistance, you know where resistance is because it's been holding, right? If you just look to the left here, right, what's been holding, right, where the red X's are. And this is the super trend, the red X's, from this 16 range just overlaid on there. So you could take that. Now, obviously, right here. So obviously, if price is going sideways, you don't have to wait for a Slinky entry up to resistance. If you know where support and resistance areas are, you can look for divergence off support and buy way down here, or look for divergence up here and sell way up here. Now, I would urge you to be really cautious in a whippy market doing that. But if the market is not crazy wild, then obviously that's going to get you in a lot sooner and have more room for profitability. Okay, right here we get closed below and green line below the red, so valid for a short here. Looking over here on our filter chart, not valid, green line's above the red. And you're going to find when price is going sideways in a range, it's going to be difficult to get everything to line up together, and that is the whole reason for requiring that, so you're not sitting there getting whipped back and forth on the volatility and the noise, just really basically the market not really going anywhere. Here, this is still early yet too, but green line above the red, so this buy is valid. Green line above the red here, so you could take it. Now again, what would go through your head is where we've been reacting here to the left here, and you could take it or wait till price gets through that resistance area before attempting it. If you took it here, depending on the size of your stop, you were stopped out here, or if you used a large enough stop, then you were there for the breakout when it finally did break out. One thing I will also point out is coming down to the area here of the 90 and the 200, and we've got that 40 points worth of space right here on our two indicators. So that's an indication that price could bounce off of this area. And I don't know if there was news what time it was coming out on Friday in the morning, because I didn't trade on Friday. So if there was news, then obviously you'd probably sit on your hands. And let's see what happens here. Here we get closed below. Here, green line below the red, so technically valid on the entry chart, but when you look at our filter chart, our red line is above 80 and overbought. So likely you would pass on this as a short. Now again, if you want to be very aggressive, you have a pretty good idea of where support is below you. I would look at the 90 EMA, 200 EMA, and now you've got the super trend stop from this 16 range right below you in that same area. So it would make sense that price is likely going to trade back down to this area. And again, I don't know if there was news. I'm sure there was some news probably at 10. I mean, chances are probably pretty good that there was news at 10. If there was, just stick to your rules around whatever that calls for in your trading plan around news coming out. Here, you can see we get a buy here, green line above the red, little dipsy doodle there, and that's part of what we went over during Thursday's webinar. But when you look over here on the filter chart, this is telling us it's not valid for the buy. So this would be a pass. And now you're actually getting a little dipsy doodle here on this larger chart for the short. Let me just mark it here so you can see it. So we get closed below here. Not valid on the entry chart, unfortunately. You know where support is if you wanted to take it, but you may be willing to be a little more aggressive on that entry here because you're getting that little dipsy doodle that we talked about during Thursday evening's webinar. That's usually pretty high probability. And then you'd look at support, again, 200, this area where the super trend stop is, and then your pivot point down here eventually as well. So I'm going to move on to a couple time-based charts, and I'll show you the exact same time frame that we just went over so you can compare using the time-based charts. Okay, so what you're looking at now is I have a 1 minute on the far right, a 2 minute in the center, and a 5 minute on the left. And I would just urge you to look at whatever chart that you feel most comfortable. But if you're going to trade off a 1 minute or 2 minute, look to the next time frame or two higher for confirmation. Same on the 2 minute. So if you're going to enter off the 1 minute, you can look for the 5 minute to confirm, or the 2 minute. If you're going to trade off the 2 minute, look at the 5 minute. And you can use any combination that you like. But here we go right here. This is at 9:31, breaking the super trend stop here. Green line above the red. Again, it's right off the open, so it's questionable whether you want to take it or not. And you'll see that you've got the 2 minute agreeing here as well, green above the red. Now, if you look at the 5 minute does not agree. Now, we did have the 40 points worth of space down here, but what I would like to remind you is that this is still right off the open. So even though it does go on to work out, I would just be very cautious again on what time you're taking the trade. Okay, so if you didn't happen to take that, then you're looking, you're waiting for another entry. So let's see what we get here. I've got the small super trend on here, and I talked about those settings during the webinar. But if you look at the break here of this super trend, the small super trend here, we're still in overbought, so likely you would pass on this as a short. 2 minute agrees for the buy, and the 5 minutes getting in line for a buy. So if you did want to take this and you knew support was right below you, I do have all the floor trader pivots with midpoints on here, so you can use that as support if you felt comfortable at that time in that you felt confident that it was going to trade back to that. And I would just urge you to draw support resistance, including pre-market and the previous day, and that will help with that. You could always buy off support here. You do get that 40 points worth of space here. So that's giving you a heads up that price is likely going to bounce or consolidate sideways while these find their way toward each other. So generally, when you have this space like this, as again we went over during the webinar, the green line will try to find its way toward the red either by price trading higher or consolidating. So here we get a break of that small super trend right here, right? So even though we don't technically agree for the buy on this chart, we still are in that 40-point range between the two stochastics. Also still here on the 2 minute, it agrees for the buy because the green line's above the red. And actually at that time, we just are getting a dipsy doodle. And I know that sounds ridiculous when I say it out loud. I kind of laugh to myself, but that's what we're calling it. And so there it is. So that also gives you confirmation to try that buy. And then also if you look at the 5 minute, now you have the green line above the red. So everything's in line for that buy there. And if the market's really fast, you can anticipate it. Generally what I'll do off the time-based charts is I don't wait for a close above or below the super trend stop. I just put my buy or sell order in a few ticks, in this case above. And if it was going lower, then I'd put my sell order in a few ticks below. Because obviously if you wait for it to close, you can obviously get in much earlier if you don't. So good news is that, yes, you get a better entry. Bad news is that, you may wish that you waited for it to close because it rolls over. It's totally up to you. I'm not waiting for it to close. So you guys can test that for yourself. Here we get closed below the small super trend stop right here, or even just get below it. Here it actually ticks through it. If you're going to use a few ticks below the bar here at this time, you can see it trying to get under that small, but we're not in line for a short because the green line's above the red, so nothing to do here. Here we break it as well, but it does not get below on this bar. This bar here, when it's getting below that super trend, we come out of overbought, so you could place your order as this bar is forming a few ticks below this super trend stop if everything else agrees. So you look on the 1 minute, it agrees on this bar. You look on the 2 minute, it agrees. And then if you look at it on the 5 minute, technically it does not agree, but there's that 40-point worth of space there again. And you know where support is, so you could take that anticipating support. Now, one thing I will point out, if you're going to take an entry using that smaller super trend stop, then you're going to, in this case, if you're going to take the entry off the 1 minute or even the 2 minute, you're going to want to just be aware of where that regular super trend stop is with the 333 settings, because price could react there. So right here you can see it reacts, it attempts to bounce, but it does manage to trade down to support, which also falls in line with that 90 EMA. And then here the same thing on the 2 minute, you get in under this small super trend stop, and then support would be down here. So basically it does eliminate a lot of the back and forth, as you can see, but if price is going sideways, you need to be aware of that, and you can look at a 15-minute chart to determine that, or a tick chart. But basically the setup will work no matter what chart you're looking at. even if you're looking at a tick chart. So I hope you find that helpful, and I'll try to do a few more videos during the week to kind of get you guys geared up for it. And then also I'm probably going to have an open house in the chat room, maybe Friday. I'll let you all know. You'll all be invited, and then you'll get to see it real time and ask me questions as well. All right, you guys, so I hope you enjoy the rest of your day, and we will chat with you later.